I've got to say it may just be one of the wildest weeks on Wall Street in decades. It's Friday right now and stocks are inching higher midday to close out a week that has been one of the most volatile periods on record here on Wall Street. As an example, the major average is taking a big tumble Thursday as traders went into risk-off mode with trade policy uncertainty weighing on sentiment and losing a chunk of the historic gains seen on Wednesday after Trump announced a 90-day reprieve on some of his high reciprocal tariffs. On Thursday, the S&P 500 falling 3.46%, the 30-stock Dow tumbling 1,014.79 points, 2.5%. The tech-heavy Nasdaq ending the day lower, about 4.31%. But just one day earlier, on Wednesday, the S&P 500 rallied 9.52% for its third largest gain in one single day since World War II, while the 30-stock Dow skyrocketed more than 2,900 points. And then there's today, Friday, China announcing retaliation by raising its levies on the United States products to 125% from 84%, with the Chinese Finance Ministry saying, in quotes, even if the U.S. continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of world economy. This just one day after the Trump administration opted for a universal tariff rate of 10%, except for China, as goods from Beijing will see a rate of 145%. Talk about a trade war. It's the U.S. versus China in this trade war tit for tat. What lies ahead is the big question. Besides an abbreviated trading week, you know what? There's a lot on the docket, some big bank rate reveals. So let's jump right into it and take a look at what will likely move the markets in the week ahead. Monday kicks off in China with the Chinese March imports, exports, and trade balance numbers for the month of March all due out. The trade balance currently sits at $122 billion. Meanwhile, Tuesday sees us over in the United Kingdom with the February three-month ILO unemployment rate expectations 4.4%, while here in the U.S., the New York Empire Manufacturing Report awaits expectations calling for a read of negative 14.8. Wednesday sees us in China once again with the first quarter Chinese GDP numbers on tap, a read that's penciled in at 1.4% quarter over quarter, 5.1% year over year. Then in the UK, we have core consumer prices for March, expectations 3.4% year over year. And then in North America, we first begin in Canada. The Bank of Canada's rate decision due out. Expectations call for a steady rate of 2.75%. While in the U.S., besides a speech from Fed Chair Jerome Powell, we have the March retail sales numbers on the docket, a report that's expected to see a read of 1.3%. Then on Thursday, we see a big pickup in action. First down under Australian unemployment. That's on the docket. Expectations calling for a read of 4.2%, while the rate decisions continue, this time out of Europe, with the ECB rate decision calling for another drop in the rate to 2.25% from 2.5%. Followed, of course, by the ECB press conference. And then on Friday, pretty much to the global markets closed for the Good Friday holiday that kicks off the Easter weekend. The markets will be reopened in full for the most part on Monday. And yes, keep an eye on geopolitics, in particular, the trade tariff back and forth between the United States and China, an event that appears to have new updates daily and therefore major market swings daily. So yes, keep an eye on all of those headlines. And until next week, reporting live from the New York Stock Exchange, I'm James Sweeney for ICM.